Good morning, UPBOptionMillionaires.com. It is Thursday, September 4th, 2014. The stock futures are up over 0.25%. This is a one-year chart of the S&P 500 futures. And you can see we hit our lows back on August 8th, 2014. At the start of last month, we've rallied for almost a month now, and we are continuing that rally. We hit record levels yesterday before pulling back. And if you look at the last 5 trading sessions, we've had quite a few rips being sold off. Okay, we had every morning we open at record levels, we pull back, and then on Tuesday we recovered pretty much all those losses. Then we gapped up yesterday, pulled back. We didn't really recover those losses. We just stagnated, and now we're starting to rally back up to these record levels. We have Draghi coming out in a little less than 40 minutes. It'll be interesting to see what he says. Of course, been very bullish for the markets. Will protect the euro at all cost. So if we see, and we've seen it with central banks, do not underestimate them. Back when we had the flash crash in April of 2010, I believe it was, they met on a Sunday. Stocks were tumbling, and they came out with the bazooka option. And the next day, Dow Jones Industrial Average futures were up 300-400 points. It was a spectacular rally, and we haven't really looked back. If you look from a long-term perspective, JB's been talking about this at Option Millionaires for quite a while, that the ECB could be the next leg higher for stocks, meaning back in the lows in 2009, it was the Federal Reserve coming out with their quantitative easing program, zero rate interest policy. And then in November of 2012, right at the start of this trend line, this is Abenomics. The Japanese came out, and you can see the yen versus the dollar hit a long-term low. I should say high, but the yen weakened against the dollar to a level it hasn't seen in quite a long time recently, over the 105 level. And if you look, the trend remains to the upside. Maybe we're running out of steam here. Well, here comes the ECB, and ECB really came out in May, talked about negative interest rates, and now we'll see if they continue with something else along those lines. Let's look at some individual names. And one thing I was pointing out on Twitter, if you follow me on Twitter, Apple was down over 4.5% yesterday before pulling back to only 4.22%. This morning it was down under 98. It was 97.50. And you can see this really sharp candle to the downside. Of course, in the long-term scheme of things, since it's low in May 2013, nothing too serious to worry about. And we're just really blowing off some overbought conditions, which is healthy for a stock. Of course, a lot of the times when you see a stock rally, it'll take it'll take the stairs to the 3rd or 4th floor, and then the 5th floor, 6th floor, and then it'll just take the elevator down. Whoa! And it'll let everybody off at about 97.50, which looks like happened this morning. And we'll see if we can find a bottom here for Apple. But if you look, down almost 4.5%, the market was basically flat on the session. I mean, that's pretty amazing that the largest company in the world by market capitalization could be down almost 4.5%, and stocks just shrug it off. They're like, all right, we'll just buy something else today. What were they buying? How about Baidu, which hit a new record high yesterday before pulling back? Baidu, and if you look at this chart, now I was talking about this stock back at the start of 2013. It was down in the low 80s. Citigroup was coming out, downgraded the stock, I think, to a $70 price target. You follow me on Twitter or StockTwits. I was talking about how they've been so wrong, and that doing the exact opposite of what some of these analysts saying. For instance, Bank of America Merrill Lynch have been saying to sell Tesla since the stock was $30, and they still maintain they had a $39 price target on Tesla, then a $45, and now a $65. Tesla's at almost $300. They have been so wrong. Nonetheless, if you can just go against some of these analysts and figure out which ones are completely clueless about this market right now, look at Baidu, which completely reversed. And I was talking about this being another stock that, and this is a beautiful chart here, once it broke out, and now we're up here consolidated. Look at this wedge, a pennant bullish pattern here that looks like it's going to continue to resolve to the upside. And that's Baidu. TLT, I was in the puts on Friday when we hit a multi-year high, but that high was right up against long-term trend line resistance. Look at this trend line right here at about 119.23. We briefly breached it at about 119.36. I think on Friday I was in the puts, and then we opened up the session on Monday with a massive gap to the downside to start the month of September. Continued yesterday before recovering our losses. And TLT is actually down again a little bit today, down at about this level. So, yeah, bonds might be boring for some, but you can be trading them via out-of-the-money stock options, making 100, 200% gain, which is what happened to those 119s that were 80 cents 80 cents on Friday. They went over $2 the next day on Monday. So if we look at TLT, as I said, stocks and bonds, I've said this in my previous videos, have been rallying, befuddling and baffling everybody. How can stocks and bonds both be bought at the same time? Well, it's happening, and guess what? Bonds start to pull back. Stocks could just continue to rally because the money coming out of the bond market's got to go somewhere. And I said it before, one of the reasons that the bond market has been so strong is the fact over in Europe, some of the countries that have been 2 years ago were ready to go belly under or belly up. 4 feet in the air, whatever you want to call it, are yielding, their bonds are yielding less than the U.S. government, meaning you go to Italy and you're going to get less bang for your buck than you would here buying treasuries in the U.S. Let's move on to some individual stocks. Google, which I've been talking about for quite a while. Let's get this trend line out of here. Right up against trend line support. Let me just pull in a little bit. And you can see it's hanging tough here, and I'm looking for this to break out to new record levels. If you pull up the 10-year chart, or there we go. You can see this beautiful cup and handle formation. We have a nice cup, the handle, and I'm looking for that move up to record prices. Again, when it happens, it's going to be a very profitable move. Could it happen at the end of this week? That's what I'm in for, but I'm also moving out to next week as well. I think it's going to happen. It's going to happen soon because we've seen record prices in a lot of stocks. How about Facebook, which pulled off a record highs? This is a 10-year, but look at every month, really the last 4 months, 5 months has been just really bullish. And it goes in these cycles where it's up pretty much 6 or 7 months in a row before pulling back. So we might have another month or two of gains before we pull back in Facebook. Twitter is over the $50 handle before falling yesterday over 3%. It still looks like to me this is going to be a $100 stock in the short term. Yes, I've been talking about this one for a while. I don't trade $10 or less stocks often. But when you get a stock like BTH moving up 35% yesterday, you see a stock like ESI, a formerly $130 stock, bottoming here. To me, that's what it looks like. And I'm in the calls here for a snapback rally. Even if it's just a relief rally, I think it's going to bring us back over $10, maybe even up to $15. You know how these recovery rallies go. They can go a lot farther and faster than people expect them to. And the key to making money off that trading via out of the money stock options is to be in that move before it happens. You have to be almost a psychic. And it's happened back in January. I was in the NUS trade before it happened. Right up here, folks. Right up here. I had the 130 puts at 60 cents. 3 days later, the stock was at $60. Do the math there. That's a significant, a $600 into over 60 grand trade possibility, and you can see NUS is continuing to the downside. So I'm not saying ESI is going to see that similar kind of reversal where it's going to go up to $80, but what I'm saying is pretty good at getting into the trade before the herd, and that's what it's all about. Like FEY, which is down 6.39%, but guess what? I was in the trade a couple weeks ago for a move off the lows. That has happened. We're getting a pullback, but this chart still is not broken. Look at the support. We bounced perfectly off support, came up here, pulled back, and I'm looking for a continuation of this move despite a 6% rally to the downside that we saw yesterday. I bought some calls late in the session to possibly capitalize on a recovery rally off this pullback yesterday. I got $32 calls for 45 cents. Let's go to Netflix, which hits new recent high. And this is another reason why I'm kind of bullish on Google, is because all these stocks are breaking out to new record levels. And I think it's only a matter of time before Google follows in the footsteps of, for instance, Netflix, which is consolidating here and looks like I would not be surprised to see this over $500 by the end of this week or the start of next week. That's Netflix. Let's look at FedEx, because FedEx was up yesterday. Yeah, it was actually up a little higher than the 0.87% that is telling you there. It was up almost 1.5%. And guess what we got? You know, it's kind of odd because the whole market was pulling back a little bit. I was like, oh, that's a little wild. But guess what? This morning, Citigroup comes out with a note talking bullishly about the stock. So yeah, that's probably why it was up yesterday. Tell all your friends the day before and then release the note the next day. So FedEx, it looks very bullish. I'm not, irregardless of the note, I'm not in the calls or the options here, but it hit recent highs, record levels at 155. This chart looks very bullish. I mean, if you want any kind of, everybody talks about how we're in a bubble economy or the environment's, bubble-like. FedEx, I mean, come on. I think obviously the company's buying back stock, but to me, this just tells you that we're not in that bubble. We're not about to explode. It's not an irrational, exuberant bubble. U.S. Steel is coming back. Almost a $40 level. Look at that. I talked about this at the start of the year as being a possible trade of 2014 when the stock started out the year at the $25 level. And if you look at it now, gosh, we're up 24. I mean, $14. Excuse me, not $24. So it's been quite a trade. I mean, that's a significant move to the upside that we see. What is that? 40, 50%? I don't know. The math, it doesn't work so well at 7 o'clock in the morning when you've been up for a couple hours. But nonetheless, look at this rally, and maybe we're running out a little steam here. Look at how overbought we are, and maybe we'll consolidate here for a little bit. Probably just knock around to the $40 and $38 range before we rocket higher to $50. Yeah, U.S. Steel again. It doesn't make any sense in this market, right? Until it does, and we've seen the banks and analysts start to upgrade the stock. So it's all on Draghi. Stock futures continue to move to the upside here. Look at this. This is a nice rally. We're almost up near the record levels that we saw yesterday. The key today is going to be, can we hold them? It's been so frustrating the last couple sessions. We start off so nice and then pull back. Start off so nice, pull back. And so we'll see. Maybe Draghi will just send us, if you could just picture a little moon. Just send us to the moon, Draghi. Send us, fly me to the moon. I can't sing so early in the morning. Heck, I can't even sing so late at night. Just all right, I'll see you in the chat room at optionmillionaires.com. Everyone have a great trading session. Take care. Goodbye.